Hey everyone, if there is one particular sector that can potentially create a lot of wealth for the investor, then it is capital market. There is a clear structural trend in India where people are increasingly investing their money in equity market via both individual stock investment as well as mutual funds. Just to give you an idea, the SIP book in India 5 years ago was around 8,000 crore a month. Today it has crossed 25,000 crore mark. In FY25 itself, equity mutual fund has received inflow of 4.17 lakh crore. As far as stock investments are concerned, 5 years ago there were around 4 crore demat accounts. This has grown 5 times in 5 years to around 20 crore demat accounts. And it is expected that this number is only going to increase in future. Thanks to India's fast growing GDP rate, young population, and basically a shift in mindset where household savings are increasingly channeling towards capital market. And this trend would benefit all the companies within capital market domain that include demat companies like CDSL. Now even NSDL is planning its IPO. Then RTAs like CAMS and KFIN. Then AMCs like SDFC, Nippon AMC. Then wealth management firms like Nuvama, 361, Motilal Oswal, Anand Rathi. Then exchanges like BSC, MCX. Then brokers like Angel One. And that's where I've been discussing two companies, CDSL and CAMS, for a long time now. In fact, I've covered the entire wealth management sector, including key growth drivers and key players in the segment. Although before investing your money, you need to understand the business model of these capital market companies. Because on one side, there's a structural growth story. On another side, these companies can be deeply cyclical. So if you end up buying at peak of the cycle, it might be very difficult to make money in the near to mid term. And that's where today I want to discuss the business model of Motilal Oswal Financial Services, whose stock price has jumped more than 5 times in last 2 years. As a result, it has garnered a lot of interest among retail investors. Last year, March 24, there were around 67,000 shareholders in the company. Today, this number is 2.87 lakh. Although if you look at the institutional holding, while FIs hold around 6% stake in the company, there is no major FI name in the shareholder list. And within DIS, there's only one name, that is Parag Parikh FlexiCap Fund. But it is consistently reducing stake in the company. The question is, if there's so much potential in capital market sector and Motilal Oswal Financial Services bound to benefit from it, then why there is no major FI holding in the company? And why Parag Parikh has consistently reduced its exposure in the company? Are we at the peak of the cycle? Or can Motilal Oswal continue to create wealth for the investors? Another interesting aspect is, in Q4 result, Motilal Oswal has posted minus 45% sales growth, fall of 77% in EBITDA, and net profits were negative. So what explained this extremely weak set of results? You'll get the answers once you will understand the business model of the company. So let's get started. To begin with, Motilal Oswal business can be divided into two categories. First is core business that include your wealth management service, capital market business that include brokerage, investment banking, then asset and private wealth management. Fourth, there is a small vertical of housing finance. Second segment is the treasury investment. Now this category is very important to understand because this treasury investment adds another engine to company's growth apart from the core business. This business is also the key reason behind 109% year-on-year loss in company's Q4 result. Let's first understand the core business of the company. So first subsegment within core business is wealth management service that mainly include the retail broking and distribution of financial products. Please note that Motilal Oswal has a strong team of around more than 1800 relationship managers and more than 9,000 external wealth managers that offers wealth management service like goal-based planning, investment advisory, where they help their clients build portfolios via mutual fund, PMS, bonds, alternate investment fund, etc. from entire universe of financial products in the market, not just limited to Motilal Oswal own financial products. Basically, Motilal Oswal earns brokerage income, or you call it commission or advisory fee. Then second is capital market segment that include brokerage business for both retail clients via their apps, digital platforms similar to platforms like Zerodha, Grow, etc. as well as your institutional clients that include FIs, DIS, family offices. Here the major source of income is broking fee from FNO trading, DP charges, margin funding, etc. Another segment within capital market is investment banking that include fee from IPO listing, M&A advisory, right issue, etc. Then third sector is asset and private wealth management. Now it might be a bit confusing because the first subsegment within the core business we discussed is wealth management. So the key difference between wealth management and asset and private wealth management is this vertical include all the businesses where Motilal Oswal manages assets directly for clients, meaning they manufacture and run investment products. Within wealth management vertical, the earning is from the distribution of financial products that need not be Motilal Oswal financial products. I hope it makes sense. So asset and private wealth management segment include their mutual fund business, that is their AMC, where they offer multiple funds, including very popular Motilal Oswal Mid Cap Fund. Then it includes your PMS service, AIF, that is alternate investment fund, private equity and so on. And fourth vertical is housing finance, which is a small category that offers loan. So this is the core business of Motilal Oswal. Now this slide shows the revenue breakup for FY25. Company did a total revenue of 5,161 crore. Out of this, wealth management contributed 2,339 crore in FY25, which is around 45% contribution. Capital market contributed 11%. Then asset and private wealth management contributed another 37% in revenue, and housing finance contributed around 7%. Growth-wise, wealth management has grown 31% year-on-year, capital market has grown 37%, asset and private wealth has grown 32%, and housing finance 13%. Overall, this core business has generated net profit of 2016 crore with a total growth of 31% over FY24. Now here is the net profit breakup of each division. Wealth management contributed 783 crore, which is 38.8% contribution in FY25 profit. Capital market contribution is 12.7%. Asset and private wealth management contribution is highest at 40.8%, and home finance is 6.3%. In terms of PAT growth, asset and private wealth has grown fastest with 36% growth, capital market 31%, wealth management 28%, overall PAT growth is 31%. Now if you observe, there is a treasury investment PAT of 478 crore that takes the total PAT of the company to 2,494 crore for FY25. So what is this? If you recall in the beginning, I said Motilal Oswal has dual engine model. First is core business and second is the treasury investment business. Core business we have already discussed. This treasury business is nothing but Motilal Oswal's proprietary investment portfolio, where the company uses its own surplus capital to invest in long-term strategic assets. Here company specifically invests that capital into its own equity products. That signifies skin in the game. If you look at company's balance sheet, you can get the details where FY25 has 8,851 crore under the investment section. In FY25, this segment contributed a profit of 478 crore. However, please note that these profits are marked to market. What it means is, if Motilal Oswal had invested 500 crore in PMS and market rally pushes its value to say 600 crore, then 100 crore is booked into mark to market gain, which is in the quarterly P&L. This is MTM profit. If market falls sharply and let's say the value drops from 600 to 450 crore, 150 crore is mark to market loss. Remember that this is not real loss. So what happens is, in Q4 of FY25, Indian stock market fell down significantly and hence the value of Motilal Oswal treasury investment fell down by 743 crore as compared to Q4 FY24. Again note that it is not a real loss because nothing is sold. It is only for quarterly reporting purpose. Hence it is showing 109% loss in net profit. Although the PAT from the core business has remained flat in Q4 FY25 versus Q4 FY24. I hope now you understand the entire business of Motilal Oswal and why its Q4 results was showing such negative growth. Now let us understand the opportunity and key risk for Motilal Oswal. Friends, we have been discussing for a long time that capital market companies have a bright future growth potential. The biggest factor is financialization of savings. There is a structural trend of equity investment with massive growth in SIP books and demat accounts. And this trend can last for a good few decades. It means capital market companies like Motilal Oswal should continue to create wealth for the investor over the longer term. Having said this, you need to understand that capital market companies are extremely volatile due to their dependency on the equity market. If you look at the last 2 years of Indian equity market, it has been a one-way rally, except for some turbulence in Q4. And that's where companies like Motilal Oswal have witnessed massive growth, especially since 2023. But if you look at the period right before that, Motilal Oswal share price tanked around 50% from the peak of July 21 till March 23. In fact, its share price tanked around 65% between January 18 till July 19 period. So you need to keep in mind that it is going to be a roller coaster journey. In fact, recently, Motilal Oswal share price tanked around 45% from the highs of 1015 October 24 till April 25. The big question at the moment is, what can be expected from Motilal Oswal share? Is it a good time to buy, or stock has already rallied a lot? So it seems like at the moment, Indian equity market is completely driven by liquidity. Well, I'm not saying that fundamentals are weak. Actually, the Indian economy has one of the best fundamentals in the world today. But the fact is, valuations are not cheap, especially for the broader market. There was recent news that Motilal Oswal Midcap Fund acquired 2.39% stake of Dixon Technology for 1,924 crore. And today, Dixon is trading at PE of more than 100. That's an outright crazy valuation. So as long as there is this liquidity-driven rally in Indian markets, Motilal Oswal should do well. But if there is any negative event in equity market, Motilal Oswal would take a hit. Then another important point that you must note is Q1, Q2 and Q3 of FY25 were exceptionally good for Indian stock market, and capital market companies made huge profit. Can FY26, Q1, Q2 and Q3 surpass FY25 performance and generate a good year-on-year growth? That won't be easy. So I don't expect extraordinary year-on-year growth from capital market companies in the coming few quarters. In fact, the growth can remain soft. Now, as far as valuations are concerned, Motilal Oswal is currently trading at a PE of around 2021. That looks quite reasonable at first glance. But understand the fact that Motilal Oswal business has multiple businesses and not every business would command same PE multiple. For instance, its AMC PMS business of private wealth management is high ROE, recurring and sticky business. Likewise, its wealth management business has a steady trail income. But its brokerage business is extremely cyclical and commoditized. Then its treasury investment is subjected to mark to market. So we can't compare Motilal Oswal valuation with specific AMC like HDFC or wealth management firm like 361 or Nuvama or brokerage firm like Angel One, because Motilal Oswal has all of it. One of the ways to look at the historical valuation. So if you look at last 5 years of valuation, Motilal Oswal has always commanded a low PE multiple, median being 11. Today it commands a PE of 21, which is the highest valuation similar to last year highs. And one of the DIs that I track very closely, which is Parag Parikh FlexiCap Fund, has consistently reduced stake in the company in last few quarters. Now let me not stress this video further. If I quickly conclude, Motilal Oswal Financial Services is a full stack capital market company with multiple engines of growth. Wealth management, broking, AMC, PMS, alternate investment fund and its own treasury portfolio. It has benefited immensely from India's financialization trend, and if this trend continues over the next 10-20 years, Motilal Oswal could continue to create wealth for long-term investor. But at the same time, it's important to remember this is a high beta stock deeply tied to equity market cycles. When the market does well, Motilal Oswal compounds fast. But during weak phases, the stock has corrected 40 to 60% multiple times in the past. So while the long-term story remains intact, you must be mentally and financially prepared for volatility. This is not a stock for the faint-hearted and definitely not one where you can buy blindly at any level. Right now, the stock is trading at a premium to its historical average. So if you are bullish on the capital market cycle and okay with short-term swings, it may be worth digging deeper. But if you are looking for stability or don't understand the business model, you may want to wait for better valuation or more clarity. Ultimately, investing in Motilal Oswal is like betting on the long-term Indian equity growth story, but with a seat at the front of the roller coaster. Now tell me in the comment, is it worth investing in Motilal Oswal at the moment, or valuations are too high? Also, if you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.